more now on Amazon's earnings. Let's go straight to analyst Ken Sena. He's the director of institutional equities at Evercore and closely follows the stock. Ken, welcome back to Bloomberg West. So first of all, what's your take on these numbers? Do you think that spending big is the right call here?
Well, I think it is. And I think if you look to the 2Q guidance, the fact that the range that they provided, the 35% year-over-year growth to 47%, I mean, that shows that the growth story here is hugely intact. And I think from a margin perspective, yes, for the quarter, the barely profitable is true. But you have to think about this business a little bit in terms of a stepping function when it comes to margins. And, the company will not be rolling out fulfillment centers as it started last year, every year. And I think that what they're trying to do is they're making sure that they can meet this accelerating demand. And so I do think it's the right decision.
That said, what about issues coming up down the line, these sales tax issues, states wanting to collect more taxes from Amazon that could result in, $500 million in losses?
I think that the sales tax issue is a real one. I think that it is complicated, though, in terms of other businesses that do interstate transactions. And so it's not as easy for lawmakers to just single out a company and say, look, you should be paying taxes. So I think that, you won't expect this necessarily tomorrow, but over time, probably there will be something that's more equitable for Amazon and, other companies like it that, don't charge taxes for similar services.
Ken, you talk about a step function. The step function's obvious. Operating profits keep stepping down. I mean, 3.1% is weak, and that's not a function, I think. I mean, you tell me, your model's a lot more robust than mine, but it seems to me the fulfillment centers and things aren't going to be in that model because those are capitalized expenses. They're selling stuff at such a low cost, great for consumers, pretty crummy if you're looking for operating profits.
Well, there's still people that have to be hired for those fulfillment centers. There's still a lot of expenses that go along with those. I think, in terms of the stepping down function and the investment, when you look at the growth story and top line, you are seeing an acceleration, and you are seeing a number of categories that are moving online, and Amazon's in a strong position to take advantage of that. It's not a situation.
Right, but you don't go into business to sell a lot of stuff. You go into business to make a lot of money, and they can grow revenues all they want. I mean, 33%, 38%, that's a fantastic growth rate. But at what cost? If the profits are going down in terms of operating profit, that doesn't make this a great business. It makes it a great place to buy stuff.
Well, I think it's important to invest in it, and it's important to think about it from a long-term perspective. When you're thinking about the overall size of the opportunity, you're not just talking about what people spend online today. You're talking about people moving into the in-store environment, people comparing when they're in a store, what's the best price? Should I be buying it here today or wait a day or so to get it from online? Or even using online to find it nearby in a nearby location. So I think that, they understand that the opportunity is a lot bigger than necessarily the opportunity today. It's important for them to invest if they're going to take advantage of kind of that overall long-term opportunity. But I understand your point. It's like, it requires patience on the part of investors, as you hear like 3 quarters in a row that, look, we're going to continue to invest. I mean, the margins are not what was expected.
So, Ken, talking about opportunities, I mean, we know Amazon has seriously diversified their business. They've gotten into the cloud. They've gotten into VOD. They have the Kindle. But e-commerce remains the biggest part of their business. What do you think is Amazon's biggest opportunity?
I think that when you think about the in-store environment and how online and in-store the lines are blurring, I think the biggest opportunity for them is to continue to focus on their e-commerce strategy, price, convenience, selection, to make sure that people use Amazon to find. And I think that's the key. And I think that's why, to your concern, you're selling stuff at no profit. They want to make sure that they're the funnel, that basically people are using them to discover everything, not just online, but in the physical world as well. And I think to the extent that they can do that, you will see margins start to advance. And I think that at that point is when, the payoff of the investment, starts to be realized.
Hey, Ken, when we look at businesses like this, with this kind of profile, maybe not in terms of revenue growth of this size, we really haven't seen a lot of businesses like this, but companies throwing off a lot of free cash flow with de minimis operating profit margins, usually they go out and borrow a lot of money so they can build their business faster. Would you expect Amazon to want to do that and maybe to get them really faster into the cloud computing business, faster into the streaming movie business and so on?
I think that, Amazon's doing a lot of experimentation right now. I think they're trying to find things, they also have a very long-term view. So I think the idea of just sort of rushing into some of these things, while it might seem like that from the outside, I think that, because of a lot of the press that is made out of it, I think they do have a pretty strong track record of investing wisely, but investing in over a time horizon that's typically longer than most investors, appreciate.
All right, Ken Sena of Evercore, thanks so much for joining us. We'll be watching over the long term to see if Amazon indeed turns this around. All right.